There's a couple different ways to use them. A lot of traders use them to try and trade in between, buy when it hits the lower band, sell when it hits the higher band. That's one way to use them. Another way
Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by Charles Schwab. I'm your co-host, Joel Elconin, and on the line we have Rande Howell. He's a licensed therapist, performance coach, and owner of TraderStatesOfMind.com. Rande, how you doing this morning?
I am very well this morning. It's a beautiful fall day here in Charlotte, North Carolina, and there's just no reason at all not to be happy.
Okay, sounds good. Now, your degrees are MED, LPC. What do those stand for?
Well, what that really means in the final analysis is I'm a licensed therapist in North Carolina. Even though I don't really practice therapy. I don't have a clinical practice. I have 4 or 5 clients on a clinical scale. Most of the vast majority of my work is with traders and with investors. And it's more about self-development than it is with clinical issues. You know, there's enough to there's plenty of work to be able to move the mind that is used to basically built around certainty, to build it into a new mind that can see uncertainty, and work with it. So that's what I do now. But the other stuff is really, I'm a licensed therapist. What that really means. Okay,
so how did you end up, analyzing traders and the trader's state of mind? Did you figure that just like anybody that's involved in trading is crazy and you figured you'd have a really big business as a result of that? How did you end up in this very targeted market?
Well, it really started because most of my work had always been based on performance and peak performance. How do you take a mind that's it's blowing in particular moments, and how do you improve the mind's part of performance? And then one day I had a guy walk into my office, and he had performance issues in his domain.
In the market, so or other kind of performance issues?
No. In trading, he was having performance issues in trading. And what happens? We sat down and started working with him, and he enormously improved over time. And during that time, what I discovered is how motivated he was, how you couldn't give him enough homework, and he had done the homework. He had done it 3 or 4 times, and he was asking for more. And I kept thinking, my gosh, this is a really motivated guy. And as he improved, he was also a trainer, so he started sending his students to me. And one day I realized that, a large part of our business is actually traders now. And what we did is we decided that we liked working with them because they were motivated. And it was one of these things where we also had, with the trading account, we had a black and white litmus test about effectiveness. You couldn't BS yourself around saying that, I believe this, I believe that. Is we made the assumption that your performance beliefs are reflected in the trading account. And if you have beliefs about the management of uncertainty that are effective, then you're going to see positive growth in your account. If you have ineffective beliefs about managing uncertainty, you're going to see that as a stagnant or drawdowns in your account. So we had a really black and white barometer, and I like that kind of stuff. It puts me to the test, it puts the trader to the test, and we would get really focused on what's the belief structure that you're projecting onto the market that's stopping you from performing to your potential. So it was ideal for me.
And this trader that came into your office, originally that got you started on this, had he had periods of success and he was tailing off and he wanted to, to turn things around, or had he just never been successfsuccessful?
Oh no, he was actually in a small hedge fund that he and 3 or 4 other partners ran, and he was the star. The problem is he recognized that he was also leaving a good bit of money on the table, as professional traders will do. And he kept looking, and it really bugged him. And he was the person that would be having the benchmark, and he was looking at it and saying, I don't measure up to the benchmark that I have. And so ultimately what we did is that a lot of people find that they will have scarcity thinking sneak into trade management, and they'll look at it and say, I can take the profits I have right now rather than risking any more. And that happened to him. And fortunately, another one of his partners ended up becoming a client of mine, and then students of his became clients of mine. And like I said, it just grew from there. But no, he was he was already successful. I mean, successful in the sense on a scale. He was already successful. He was consistently profitable. He was making money, but he wasn't making the level of money that he knew he was capable of doing.
Okay, and so with traders, dealing with him and other traders that come for help, is there like one common trait or one thing that like you see in like almost every struggling trader that you try and address first, or do people come to you, with different reasons, varied backgrounds?
They have different reasons, and what you're really looking for is how they've managed success in the past. It's very common for, particularly in retail trading, for guys to come to me that have been very successful in either corporate life or business life, and their success paradigm is being able to really make things happen. Just, really that alpha type of mentality that is so needed in business, and they get into trading and they think they're going to learn how to trade, and they're just going to make gangbusters. And what they do is they get in that aggressive, basically willpower-driven way of making things happen, stalking, chasing the trade, does not work in trading, and they have to redevelop so that their winning strategy is really more about patience, because the patient trader is the one that wins in the end. That's one of the big ones. And others, people come in as perfectionists, where they look at it and say, I'm going to be able to manage this because I really understand the left side of the brain, and I can manage all this stuff, and I can see the patterns, I can see all that, and I won't make mistakes. I can be perfect. And they get in and discover that no matter how right you are in trading, you can still be wrong. It's a probability game. And so you're looking at it really from the alpha type of stuff to the perfectionists getting in. They're still trying to control outcome, one way or the other, by seizing control or by not making mistakes. And ultimately they get in and they can't regulate, they cannot control the outcome. And ultimately the switch comes when they begin to see that the only thing that they can control is their performance of execution. And once they grasp that, and they start learning how to work with probability and uncertainty instead of certainty. Those are the two types that I generally see more than anything else.
Do you see a particular makeup, a psychological makeup, or that makes good traders? Going back to when I traded on the floor at the Mercantile Exchange, it was very physical, and a lot of pushing and shoving, and had a lot of former athletes came in there, and by brute strength got the good positions in the pit, but maybe also it was their discipline of being a former professional athlete. Do you see any common traits, or take the flip side of it? Is there a personality trait that if you have, boy, you should just stay away from the markets?
If you have to win, if you have to control, you should stay away. And you'll probably, if you've been in the pits, what you've noticed probably is that a lot of very successful pit traders and floor traders do not make good screen traders. They're sitting in that pit on that floor, and they can read emotions. You have got the brokers there, you've got the power players there, and you can really feel the emotions. And what a pit trader will tell you, trying to learn screen trade, is that, and he'll say, I know that's going on behind these screens, but I can't see it now. And so they've had this ability, and when it translates, particularly like with athletes, where it's all about domination, it's all about winning, and ultimately when you get into trading, it's really about maintaining performance. And what you can win is your mind. You can't the markets are just too vast to even know that you're there, much less to try to dominate and make and exert your will over them. So you find the guys, you find the traits, you find the person who will develop patience, and that's the guy that has the least of the mountain to climb to be able to build a mind that can trade well. If he's got patience, if if he's not a stalker in the way his hunting style and is more of a patient ambush type of person, he will do a much, much better, he or she, I might add, much better in trading than the stalker. There's actually a good analogy that I use is I make the analogy between the way an African lion hunts and the way a North American panther hunts. Is the lion hunts by attacking, by stalking, attacking, and a coordinated attack. And they're very good at it. They're the apex predator. Yet, if you took that same strategy and you took it into the forest of North America, they'd starve. There, the panther, the way the panther hunts is he will climb a tree, sit on a limb, and literally sit there for hours and hours on end, waiting very patiently. As a matter of fact, you'd look at them, you'd almost think they were asleep. But what they know is they know the patterns of white-tailed deer, and they wait for the setup to come very patiently and then strike. That's the mind of a very successful trader. If you look at trading through the lens of a hunter, you're not stalking at all. You're not chasing trades. You're patiently waiting for the setup to come to you. That would be the big difference.
And do you ever institute the opposite theory? If someone's in like a real bad streak, instead of, they're on a major streak of losing trades, if they think they want to buy, do you tell them to sell? Do you ever institute the opposite theory?
Say that again. Let me better understand what you just
like if it's kind of a joke. I say, if I'm like in a really bad, losing streak, and I look at the index and I want to sell it, then I turn around and buy it because I've been on such a losing streak that it's called the
do the opposite. Do the opposite of what you've been doing.
Yes.
I don't recommend that. For me, what you're doing is that you are engaged in game theory when you're trading, and you're engaged in a probability set, and anything that takes you away from being able to maintain a standard practice, applying it to the markets, it can be really lucky in the short term, but the people I see walk through here is that when they try that they find it's just as awful. The mindset that they're bringing to the market is the problem. It's not whether or not they're doing it opposite of what they think they ought to do. But no, I consider that real novice trading. That's not the mind. If you're having a bad streak, and really to me there's fundamental questions to ask. You're asking, is this a method mistake I'm making? Am I making methodology mistakes? Or, if that's not the case, am I making psychological mistakes? Am I exhibiting fear? Am I exhibiting impulse? Or am I just simply on the wrong side of probability for a while? And, if you've been trading for a while, you can take a string of losses. But if you go back and you do a review and you say, something, I'd take this trade all over again, based on my risk assumptions, I take the same trade over again. Then what you're doing is you're just having to let the law of averages work. But no, I wouldn't be just jumping and deciding to do the exact opposite when I'm in a bad thing. I would be much more interested in asking myself what's going on inside my head that's generating these kind of results. That's what I would be doing.
And how long have you been treating traders and being a therapist in the markets?
Oh gosh, therapist. I've been 8 years. It started about 8 years ago, and it just grew and grew and grew to the point where that's literally what I do for a living now.
Okay, well
By the way, I also work with financial managers too. So
okay,
managing funds. They have a slightly different problem. They don't have. I was speaking in Hong Kong last year, and a guy came up to me after my presentation. And he says, "Randy, I really liked your presentation. I never really understood what a micromanagement a trader's mind has to be open to." He says, "Our problem in the community of investing, we're not worried about micromanagement of psychology. It's just the unrelenting pressure to perform that's grinding on us all day long." And fundamentally, there what you're having to learn is how to emotionally regulate the emotions and really attune and really check into your beliefs and begin to realize that this is in fact this is a game of uncertainty. You never know the outcome. And at the same time is that if you maintain mind and make really good decisions basically with a real stabilized set of emotions, you're going to come out better in the long run. That's really what it boils down to.
Okay, one final question for you here, because I wanted to, and this is a good one. So you've been doing this for 8 years, right? So that would take you back to to 2006, 2007. Did you have like a huge influx of customers, during the financial crisis and preceding it, where people just couldn't figure out the markets, and then let's say, you have the couple years of turmoil, the markets start to head up, and then everyone's being back to a genius, and now if there is some kind of correlation, are you saying, is your phone just ringing off the hook the last couple of weeks with the volatility of, people pulling their hair out and thinking, man, I need to get in to see somebody? Do you see any correlations along those lines, or am I just really stretching things here?
No, you're not stretching things at all. We've definitely seen an upbeat. I wouldn't necessarily see during good times. It's really interesting is when everything is great, and this is, I'll tell you what, this is interesting, and I'm going to pit this with something I found in China when I was speaking there, is that they love to feel euphoria, that really feeling good, look at me, look at me, look at me, and when you're on a roll, you just start building this, yeah, man, look at me, and you start making the assumption that you're doing this rather than maintaining a very rigid, very, very strong standard practice. And my view is that when you're trading and you're making decisions like this, is that your mind has to be rooted in discipline and impartiality. There is no room for feeling good. Feeling good is something you do after the day's over and you're willing to celebrate. But the mind that you need to be able to maintain really emotional sobriety and make really good strategic decisions is rooted in discipline and partiality. What I see is during the good times, people get euphoric, kind of like what happened to the whale with J.P. Morgan a few years ago. And, the risk manager was away, sick, and, you had a group of traders that were full of testosterone and got euphoric and started making really dumb, stupid decisions. After dumb, stupid decisions started really having fallout, then they fell into fear. And that's the time where a lot of guys will say, yeah, I need to find somebody to help me deal with this fear. But to the really good trader, fear is not the major problem. Euphoria is the major problem, because euphoria as an emotional state is going to cause you to believe with certainty that the good times are going to roll on forever. And you make bad trading decisions based on that kind of thinking. And with fear, fear is an emotion that says there are bad things on the horizon, you better hold back. And you can see the warp and weave between these two emotions in professional trading all the time, and also retail trading. And the real key is, can you maintain a very strong emotional sobriety moment and maintain the mind that's working with uncertainty? And, I have found that it really does take training. It really does. Some people learn it over a period of 10, 15, 20 years, and some people are born with it. For most of us, though, we have to make that transition and realize that, no, all thinking is emotional state dependent. So I have to be very careful about the emotions that I'm in that's producing the thinking, because that thinking is what I'm projecting onto the markets, and I'm getting feedback. Interestingly, is I saw traders make an enormous amount of money during the housing debacle and stuff like that. And it was the ones where they realized that this was not euphoric moment. This was time to be calm, calculated, cold-blooded killer. And what they were able to do is they realized that, no, this isn't about me being euphoric and me being such a great picker. This is me about taking advantage of other people's euphoria, and they want. And the key there is that can they maintain not being euphoric or fearful themselves while they trade. But you find the really good traders are really level-headed, and while they're trading, they might say or do things afterwards, but they're very level-headed.
I can attest to that. Traders are definitely a different breed. Well, Randy, I think you're going to have to save a spot for me on that couch in your office here, and I'm going to have to make a trip down to South Charlotte, North Carolina. You are just making some great observations here about the market, about the psychology of trading, which is something Dennis and I talk about all the time on the show, how important it is. Rande Howell, licensed therapist, performance coach, and owner of Trader States of Mind. Thanks for coming on, Randy. We hope to have you on again soon.
You betcha. Thank you. Bye-bye.